Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for March 19th, 2024. Well, I hope you all had a good evening, ready for another day of, well, probably a little bit of hurry up and wait as we wait on the FOMC decision. Let's take a look at what happened overnight. First off, if we take a look at Asian markets last night, they were mostly lower, but mixed, quite mixed. The Nikkei actually rallied 263 points last night after Japan ended their zero interest rate control in Japan and actually started to move rates higher. If we take a look, Australia also a little bit higher, but South Korea, Hong Kong, and Shanghai were all slightly lower, with Hong Kong taking the biggest hit down 1.24%. If we take a look at European markets, now European markets are mostly higher this morning, but relatively flat. Not quite as flat as they were yesterday, but relatively flat. Right now the DAX is up 0.35%, FTSE is down, and the CAC is up 0.41%. But that'll bounce around here quite a bit this morning. U.S. futures are down across the board this morning, but as always, we can kind of expect this time of morning we'll start to get the morning pump. And of course, we have that new news on NVIDIA, and oh my gosh, as soon as we talk about AI, we just get completely Twitter-pated in the market. So watch that carefully as they've introduced new chips, and we'll see what happens here as the morning progresses. Taking a look at oil this morning, oil had a pretty strong move yesterday to the upside, but we're down just a tiny little bit in oil futures at 82.51 a barrel, down 21 cents. Brent is down 25 cents at 86.64, and natural gas being up just a touch over a penny. If we take a look at our bonds, well, bonds really, they moderated maybe just a tick or two, but they're still holding up really strongly. The 2-year bond is at 4.71%, the 10-year bond at 4.31%, and the 30-year bond at 4.44%. So we're still seeing that problem here where the bond market is kind of disagreeing with the overall market itself. Market continues to try and ignore this, but we'll see how much longer that can continue. One's going to have to be wrong and break here eventually. Taking a look at anything in that precious metal market, most everything is pulling back here this morning in that commodity precious metal market. We have the dollar showing just a tiny bit of strength here this morning, pushing back up, and partially because of some of these fluctuations that are happening in the market due to the Japan change. Let's take a peek at those cryptos. Somebody asked me to talk about cryptos. Cryptos are down across the board this morning. As a matter of fact, Bitcoin is substantially lower here this morning, down over 5.5% or $3,800 a coin. So be kind of careful here. Again, a strengthening dollar creating some issues there in crypto. Let's take a look at our charts here, and let's see if we can figure out how we might want to approach the market for today. But before we do that, y'all, let's settle in, let's buckle up, and let's get ready for the Tuesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. Very much appreciate it. Looking at the charts here this morning, well, obviously we've got just a little bit of uncertainty came into the market yesterday, and mostly at the end of the day, we pushed up all morning, really encouraging retail traders to try and buy. but then we had quite a fade going into the close of the day. So when we take a look at this, let's try to shake off a little bit of bias. Let's look at the charts for what they are, not for what we want them to be, and let's try to lay out what would happen if the bulls are inspired or if the bears were inspired today. First off, let's take a look at our diamonds. Our diamonds, as you can see, well, we kind of faltered here just a little tiny bit. Nothing terrible in here yesterday. We ran up and we tested that downtrend resistance in the chart, and then we just kind of faded back. Just not a lot of energy. And as I kind of suggested yesterday, that it could be a hurry up and wait day, and except for the tech giants, that really was the case. So looking in here, if the bulls were to find inspiration today, well, we need to see them pushing through this downtrend and maybe pushing up to test some of these resistance levels in the chart. We need to get through these resistance areas and push on up to give us some confidence that those bulls continue to have energy pushing through. And if they can get through there, that downtrend area and this resistance up above, well, then we start looking a little bit higher to see if we can move on through, and then past that we're blue sky above. Now, if the bears were to find inspiration here today, and you can see futures just a little bit lower here this morning, if they were to get going here and the bears get kind of aggressive, then maybe we can test this low right in here. Notice the bottom of those three candles right there in the very same location. So maybe we test there, and if that holds, we're in good shape. We're just in consolidation. If we see those bears push down beyond that, then we're going to be looking down in here as that next level of price support in the chart. Breaking down below there, it gets a little bit dicey here. You can see we've got some support levels in here, but nothing of major consequence until we move substantially lower here in the chart. So if we drop through this level, I would look for a little bit of fear to pick up in the market, and possibly some big point moves coming here in the diamonds if the bears were to be aggressive enough to push down through that level. If we take a look at our SPY, well, SPY, not so bad here, but it just didn't perform as the market, I think a lot of the bulls would have hoped yesterday. Anyone who bought yesterday probably feeling a little bit uncomfortable with it this morning. As you can see, we pushed up in here into that resistance area of the chart, testing that downtrend. Didn't quite make it through there, and then we had that fade at the end of the day. So if the bulls can find that inspiration, first thing we need to do is pop that high of yesterday and get through that downtrend. And certainly possible. It's not like it's a giant move to make that happen. Pop through that downtrend, and then we're up here testing the highs in the S&P 500 and maybe even blue sky above that. Now, if the bears were to find inspiration today and we react negatively up here and follow through to the downside, well, first step is let's see if we fill this gap in here. Come back down and fill that gap, see if we can break down through there. If that were to break, then I'm going to suggest that we're coming down into this level, and past that level we're coming down into here, and then of course we're looking at this major level here in the chart. Now, what's important about this major level here is the fact that we have this gap in here on the SPY. So if we were to drift below there, and this would be some big point moves, then we would feel maybe some pressure or some worry falling into that gap. We could move pretty quickly, is what I'm suggesting, and big point moves to the downside if we find that inspiration. If we take a look at our QQQ, well, QQQ also faded back pretty substantially yesterday after that big Q push, that big NASDAQ push, fading into the end of the day. We're kind of running into a bit of a downtrending area here in the chart, trying to cling to this cliff edge. And I say cliff edge because of this giant gap that we left behind here in the QQQ. If the bears were to push this on through and break this down, then that could be pretty big point move to the downside. But looking to the upside, as you can see, we need to push through this little downtrend. We need to break through some of these resistance levels here in the chart, pushing back up to these next areas. So far, we're not seeing that, but breaking through up here, then we run that chance that we could pop through into all-time highs. A failure here puts us into maybe a little bit of concern really quickly dropping into this level. There is a little bit of price support right along there that we might grab onto first, but I think there is that chance we would push right on lower in here and fill that gap pretty quickly in the Qs. So big point moves possible in the Qs if the bears were to grab a hold. And then if we take a look at our IWM, well, unfortunately, one of the things that we're seeing in the market is when the Russell or when the QQQ is really, really strong, it sucks money right away from the Russell, because we have such a small leadership in the market in the tech giants, and it sucks that money right out of IWM, and IWM just really couldn't perform yesterday, couldn't get going. And so if we take a look here, that possibility that we lose this support here in the chart does exist. If the bulls can find inspiration, well, first thing we need to do is we need to get back above there and then start working to progressively move up through these resistance levels in the chart to start working that back up. If we break down below this area here in the chart and see that push, there is a little bit of support right in here somewhere in the center of these two lines. We might find some support, but if that breaks, I'm suggesting we come all the way back down here to this green line in the chart, a pretty big point move, and that would be ugly if the bears really grab a hold. Now, the question is, would they do that today? And my guess is probably not really pushing that big point move. It's possible if data kind of starts swinging negative, and you can see this morning there's headlines all of a sudden, that banks are in trouble, particularly their regional banks, and there's problems there. We've known that for a long time, and the market has literally been ignoring it. Now some cracks are starting to show, stories are starting to come out, and maybe that financial issue could really raise some concern here in the market, and we could move quickly. But I'm going to guess it's likely going to be on Wednesday where we get our big move in the market. We're going to figure out what the Fed is thinking, and depending on how the market wants to react to that, could create those big point moves. Let's take a look at our VIX. Our VIX popped up here yesterday, but you can see fear just really pulled back in the market. No major concern there on the VIX. You can see there is a price resistance right here in the chart that we've been testing and haven't been able to break at the moment. And if you look across here, we're still holding this little upside channel. It's very shallow in this move. No fear in the market overall. We're still pretty exuberant here, thinking that the Fed is going to cut rates and everything's going to be glorious and the soft landing. I'm here to say I don't think that's going to be the case, but I could be wrong. Jerome Powell never called me to ask me my opinion on it, as you might be surprised about that. If we see fear coming into the market today, if the bears push, well, then let's look for push back up here to see if we can retest this upside of the channel. And if the fear continues to drop out of the market, then we push on down and we test this lower side of that channel to see whether or not we can push it on through and break it to the downside, suggesting that there is nothing here to worry about. If we take a look at our T2122, was really interesting in this yesterday. While the market was really screaming higher early on in the day, Well, we had stretched this up pretty substantially, but it became very evident early on in the day that there was no momentum in the market. And as you can see, T2122, this is a 4-week new high, new low ratio. So keep that in mind. This isn't anything I'm predicting. This isn't anything, it's not magic. It's a 4-week new high, new low ratio. And as you can see, we ended up the day while we were getting that impression that, my goodness, the bulls were just re-engaging and everything was wonderful. Well, not so much. As you can see, we saw T2122 finishing a little bit lower, dropping just below that 50% area here in the chart with that fade back at the end of the day. We just didn't have the momentum here in the market. So if the bulls can find inspiration today, they've got plenty of opportunity if they can find that inspiration today to move to the upside, and just about equal opportunity for the bears to move to the downside. So we're kind of straddling the fence here, trying to decide which way are we going to go. And your guess is as good as mine where that inspiration might come in here. And I think today is probably going to be another one of those days of hurry up and wait. Really choppy price action, whipsawing back and forth as we wait for the FOMC, unless this banking situation really starts to pick up. If we take a look at our T2108, our T2108 had a little bit of a time where T2108 was turning to the upside yesterday, but you can see the percentage of stocks above the 40-day actually slipped lower, and you might actually notice that we're creating possibly a bit of a head and shoulders type pattern here on that T2108. We'll see if they can find some support in here and push back up off of that. If we were to dip lower here today, I think a critical area is going to be right there around 50%. If we drop this back below there, might be a little bit of concern coming into the market. And that uncertainty with the FOMC meeting starting today is, not a major surprise. Shouldn't be a major surprise in the market. If we take a look at T2107, T2107 came in pretty much flat yesterday. It had been up, it had been down, it was whipsawing all over the place, but I don't see this as really a bad area here to maybe just be resting in some uncertainty. We broke a little bit of support in here, but there certainly is plenty of price congestion in here to hold that. We did break this trend, so if the bears were to engage, pushing down to some of these other levels of price support might be possible. We'll want to watch that carefully. And remember, this is the percentage of stocks above the 200-day moving average, and it just didn't really progress yesterday. Even though we had that big tech push with just that hint of, oh my goodness, Apple is going to include, Gemini in their phone, and my goodness, that means AI is the greatest thing ever, and all the techs got a boost yesterday for that. So interesting market, how we're so keyed in on anything AI. It really reminds me of the dot-com days in 1999 when the market would just, it was just, glowing, and we just praised anything.com. We didn't know why. We didn't know what it was going to mean, but it just heaped the money on and heaped the praise on the .com thing. And we're kind of doing the same thing here with AI, because we still don't even really know what AI is going to do for us overall in the market. We're still learning and trying to figure out how AI is going to affect things, and yet we're just gushing in the market about that, and that can create some major problems here, like it did in 1999. Very different market than 1999. It's not fair to do a comparison necessarily, but that emotion that we're trading this market with is very reminiscent of 1999. Now let's take a look at our T2101, and here's where our real problem lies in the market. We're pretty flat here on momentum. The absolute breadth of the market is very, very weak, and with the blackout period, more and more companies sliding into that blackout period, we're going to see this likely continue. unless we get a big bear attack. And I'm thinking the big bear attack, if that comes, we could see that breadth expand on the bearish wave here in the market. We've been struggling here to keep it going on the bullish side. The momentum for that upside move has really faded. Now, it's possible it could come back very quickly, but so far it's just showing weakness here overall in our market breadth. If we take a look at our economic calendar here for today, well, our economic calendar, as you can see, we've got a few things that we're going to need to be paying attention to, and mostly thinking about what's going to happen on Wednesday. But we're going to be looking at a housing market index number here this morning. Keep an eye on that. Our housing prices went up yesterday. If you notice that, they're looking for an increase in building permits and also an increase in starts here. So watch that carefully. It could be interesting just based on the fact that rates are going up, lending is getting a little bit tight. We'll see if that plays out or not. But that's going to be our big number for today that we'll want to be paying attention to. And as we move on through that, we've got some bond announcements, bond auctions, and a Treasury International Capital, which we'll largely ignore. Beyond that, of course, what everyone's going to be thinking about, whether we like it or not, we're going to be dealing with an FOMC meeting tomorrow. First off, we're going to have mortgage applications. We're going to have Atlanta Fed business inflation information, probably ignored. Petroleum status, which could be really important as we're seeing those gas prices run up pretty high here, and that's going to have a negative effect on inflation. So watch that carefully. And then we're going to be coming into a little bill auction, and then the FOMC in the afternoon, where we're going to get the Fed chair's press conference. We're also going to get the FOMC projections. What are they thinking about the move ahead? I think largely, well, at least for me, I'm expecting the Fed to say nothing about raising rates. They're probably going to leave them flat, not do anything. They may provide a projection that maybe sometime later on this year there may be some cuts, and the market could respond bullishly or bearishly to that, depending on how much emotion that we've done here. But I think the Fed's going to do exactly what it always does. It's going to say, we'll cut rates when the numbers show us that it's okay to cut rates, when we're moving toward our 2% target. What we're seeing right now is we are not moving toward that 2% target. The last couple of months, we've been moving away from that 2% target. So the only thing that could make the Fed cut is a major banking crisis, or we suddenly see jobs dropping dramatically. And that would make the Fed move, because we're not seeing any change in inflation just yet. Let's take a look at our earnings calendar here for today. Our earnings calendar, pretty light, and not a whole lot here on things that will really move the market a bunch. But CAL is on that list today. Looks like it's moving a little bit lower after its report this morning. We got EXK on the list today. It's on my list, but I got to tell you, I mean, a $2 stock, not particularly notable. It is interesting that it's broken the downtrend, that it may be trying to hold a higher low in here. That earnings report could be very, very important today, so keep an eye on that. TME will also be reporting today. Keep an eye on that. Those are all this morning. And this afternoon, really the only notable that we're going to have for today is ZTO. And once again, if you're holding it, if you're paying attention to this stock, clearly that's an important report, but overall, it's not going to be a major market mover for the day. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and then also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief brief comment. That helps the channel to continue to grow. Thank you so much for everyone who takes the time to do that. I do truly appreciate it. Let's take a look at some of these stocks, and remember guys, these are not recommendations to buy or sell any security. As a matter of fact, you need to do your own due diligence, be very careful in this market, and just remember, follow your rules and your guidelines. Never ever blindly follow anyone else's trade ideas. So let's take a look at a few things. One of the things that was really interesting yesterday is we continued to see that weakening dollar pushing pretty hard on oil. We had oil stocks continuing to hold up yesterday. You can see here in XLE there was just a little bit of back and forth, trying to hold up overall though, because we continue to see that pressure in that oil sector as the dollar weakens. That could slip just a little bit here today if that dollar does weaken. If we take a look at strengthen. If the dollar strengthens here today, and you can see here in the US dollar fund trying to push up just a little bit with a little bit of energy here this morning, that change in Japan really making some fluctuations happen here in currencies. So watch that. If the dollar strengthens, we could see oil weaken today, and we're already seeing gold weaken just a little bit today, silver, those kind of things in the market. But I still think gold, silver, soybeans, all of these are in potential setups. We've made this push out of the downtrends. We're pulling back. If we can find some supports in here, look for that next opportunity to move up along that trend. Just give it some time. Unless the dollar really strengthens, these have potential of moving up. So keep an eye on soybeans, keep an eye on sugar, keep an eye on corn, keep an eye on gold, silver, palladium, copper. You can see here stocks like FCX finally took a little bit of a rest here yesterday, but this is a major resistance breakout up here on FCX. So those miners looking pretty good. If this can rest back and hold in here, then I'd be looking for that next opportunity for those to move on higher. Take a look at things like SCCO, very strong in this move. If we take a look at things like Steel Dynamics moving up nicely here, breaking through some resistance yesterday. Notice it's trying to gap higher here this morning. So breaking through this big resistance is all-time highs here in Steel Dynamics. Any rest or pullback here that comes back to this trend, I would be looking for the next opportunity for entry into some of those steel names as well. And then if we take a look at some of the defensive names, boy, we had quite a pop here on PepsiCo. Some of the defensive sector stocks getting a lot of attention yesterday, again with that potential rotation that we might be seeing here in the market. And you can see PepsiCo strong move yesterday. Any rest or pullback that holds a higher low in there could set that up to the upside. You'll notice that popped through that 50-day moving average and almost went straight to the 200-day all in one move. Big strong move in there. Now Coke didn't get the same kind of love. Was no really love or attention in there at all. As a matter of fact, Coke still runs that possibility that it could fail. We need to see a little bit more strength here on that. But we certainly saw some strength in some of these stocks like Walmart continuing to hold. Again, defensive sector stock holding in here, trying to hold those higher lows, holding in that trend. These are all-time highs here in Walmart, where we could push right on through. Every reason to believe that that is possible. We saw Target making some moves yesterday. As you guys know, I mentioned this yesterday, and that possibility that this might be finding its legs here and trying to push on up. So keep an eye on Target. You might want to keep an eye on stuff like CVS. CVS making a break here, broke above its downtrend here in the chart, kind of stretching up, rest or pull back in here. Look for that next opportunity in CVS. As you know, I've been talking about Tractor Supply. That's continuing to work, heading on up, maybe to test this upside channel in the chart. So watch that carefully, trying to stretch on higher. Again, something in this ag-related area that agribusiness is really picking up. Costs of food items are moving up here right now because we're seeing all these prices of our commodities moving up as the dollar has weakened. If it strengthens, that may change this, but watch that closely here in the market. Let's take a look at a couple other things here. If we look at our tech giants, things like Microsoft, boy, there's just no way you can look at Microsoft and really see any bearishness just yet, showing very, very strong here in the market. That pop in here that made new record highs, then pulled back pretty quickly. It's going to be important it holds this trend bearish here in this upside trend, but look for that next opportunity if those bulls pick up in some of the tech areas, come right back up into a chart like that, pushing on higher. When we take a look at Tesla, well, Tesla bouncing back up to resistance in this chart, but I got to tell you, there's nothing about this chart that looks bullish at the moment. We could literally run into this area of resistance and then continue that move to the downside. If we can break through that resistance area in the chart, coming up here into the downtrend, still that doesn't change anything overall in Tesla. Not looking too good here on that one. AMD, quite the pullback here and a break of this trend, but so far doing okay, holding on to this price support. Unfortunately, if we were to see any further pressure here and break below this support area in the chart, there could be a little fear that comes into Tesla and we would drop back to the lower side of this chop range here in AMD. Could happen pretty quickly. So quite a few stocks to look at out there, and there are a lot of potential long stocks, a lot of potential short stocks. Quite a mix. I would expect another choppy day in the market. Don't be too surprised if we whipsaw multiple times throughout the day as we're waiting for that FOMC decision later on tomorrow afternoon. So a lot of hurry up and waiting having to occur here in the market. So with that, everyone, I want to wish you all a fantastic day. Wish you great results in your trading. Thank you so much for being here and listening. I truly appreciate it. And I'll see you right back here bright and early Wednesday morning. Have a great day, everyone.